Today was a game changer for investors. If you're invested in stocks at all, everything is shifting from a narrative of tariffs and recession to a narrative of deals and growth. Today, I'm going to talk about exactly what we've seen play out, how I think there's a clear narrative forming for the rest of 2025, and how I think this is going to impact our investments as stock market investors. Welcome to Golden Arch Investing. My name is Liam. Here we talk about investing in Canada. Today, we're going to be going a little bit more global. We're going to talk about the stuff that impacts all of our portfolios, but we are going to keep a focus on Canadian companies and Canadian sectors. So first and foremost, let's talk about what exactly has happened. If somehow you haven't seen the news, there was some really big announcements this morning made about the deal made between the United States and China, where they decided to take a 90-day tariff reprieve, and they dropped the tariffs by 115%. So from the US is 145%, they're down to 30%, and from where China was at 125%, they're down to 10%. So there still are going to be tariffs between the two for the next 90 days, but it's significantly less damaging than the 140% tariffs. And it's going to mean a lot more businesses can breathe easy because they have this next 90 days where they can import things and they don't have to worry about paying that huge quantity. But the more important thing is that suddenly we have seen a massive shift in the way large investors are looking at the market in 2025. And so that's what I'm going to focus on today. How does this deal show the path forwards for us as investors, and how can we make better investment decisions based on that? To do that, we've got a whole bunch of information to get through. So we're going to have it up on the screen right beside me. And I'm going to do my best just to walk through the important bits. So the first thing I got here from Reuters: global stocks rally after US-China pause tariff war, but uncertainty remains. And it covers all the things we talked about. So the details, we got a 90-day deal here. This is technically a truce, right? Or a pause. This is not the end. This is not the final deal. Things could get better or worse. But as you saw in the headline, I think the key moment there, uncertainty remains. It's still clearly not done. The conversation isn't over. We're just pausing for the next 90 days. As we go through the article, you see the same numbers I was showing you earlier, right? They're down 115, so 145 becomes 30, and China's 125 is going to become 10. And that's going to really help a lot of the challenges that people were talking about with supply chains. We had seen stories popping up about the ports in the United States being empty. There's going to be no products coming into the country. I think this pause definitely puts that conversation on the back burner. Really important. The dollar went up today. Safe havens dropped. And I can also say, since the day has passed, since this article is written, stocks are up quite a large amount, right? We saw everything jump well before the open, early in the pre-market. Things were just jumping up after this was announced from Geneva, where it was morning. And so all sorts of things. And this is an interesting point, because the Trump team mentions how this and the UK trade deal announced recently are showing that the policy is working. And that's where I think we can kind of see the clear blueprint for how you get a deal done right now with the United States with trade. You can't get rid of all the tariffs. They have left tariffs on both the United Kingdom and on China while making these deals. So I think the market has kind of digested that and understands, okay, yeah, maybe this isn't as good as we thought it was going to be, but it's better than what it could have been. And that's a big deal. For a lot of investors, things were looking really scary. 10% tariffs are a lot easier to sort of stomach than hundreds of percent, right? It's not clear whether or not this is going to have a huge impact on US manufacturing, but I do think it's going to have a little bit of impact on investments being made, because I think having a clear blueprint makes it a lot easier for businesses to make an educated guess and to invest a little bit of money. Now, it's probably going to favor the United States. We talk about manufacturing businesses, but also other places. If your business model makes sense with a 10% US tariff, it's a lot easier for you to make that investment, build that factory, whatever it might be, in whatever other market you might be looking at. So as a Canadian, obviously good for us that we can see, oh, hey, that's pretty clearly what's going to happen. Maybe it'll be different for us in Canada, but maybe not. The article continues, and it's a lot of sort of commentary. It talks about what is the goal, and it talks about people are trying to score points on each other, talking about, oh, this is the US giving up, or this is, China giving up on either side. That's not really interesting to us as investors. I think the important part from this article is talking about the the time frame and the details. I do want to point out 90 days is not a huge amount of time. And for the US to be able to find a deal they like in 90 days, that's frightening. And I think the bigger story there is that obviously we know that the rest of the world had that 90-day reprieve from April 2nd. Obviously that runs out in the not so distant future. What then? Do we see another 90 days, right? Are we pushed back further? Are we delaying further? Or do we see this story sort of play out? Now, one of the companies I thought was really, really interestingly impacted by this, it's a Canadian company. It's had some big moves going on. I'm going to jump over here. We're talking about Shopify. Shopify moved up 14% today. And of course, the headline, as you can see right here from the Financial Post, they jumped up 14% on news of NASDAQ 100 inclusion. Obviously, Canadian tech giant, talked about them on the channel. A really, really high quality stock. I included them in my video about high quality Canadian stocks to talk about, but a 14.5% jump is huge. And seeing them included on the NASDAQ is great. But if we think back just a week ago, and to make this even easier, I'm going to show you this. This is we're on Yahoo Finance here. I'll show you this. If you think about where the story on Shopify was, basically ever since the tariff conversation started, right? We've seen it just down, right? We see a recovery through the month of March. And of course, like every other chart, you can see Liberation Day here, huge drop, sort of trading down, trying to struggle its way back up before this bounce that just today got it above where it was on April 2nd, but obviously not quite where we saw up at the $183 range it peaked out at in February. And I think Shopify is a good bellwether here because it is an e-commerce growth stock. It is definitely a risk on play, right? You're paying a higher price for a high growth company that really is in tune with the consumer, right? These guys are in touch with all sorts of consumers at all sorts of levels. So their story is about, okay, do we see growth in e-commerce? Do we see growth from the consumer? Do we see them innovate in ways that allow them to monetize this better, which we had been seeing in 2024. And obviously the story's changed in 25, where we were thinking recession, flood out of this stock. And so seeing Shopify today jump back above where it sat on Liberation Day on April 2nd, we are definitely seeing the trend change. And I think that's really interesting because we see these 90-day pauses in all sorts of tariffs globally. And I think the story is now growth, that we are looking again, what can grow? It's going to be a harder environment. So maybe the highest risk assets, pre-profit or unprofitable companies, maybe those won't see the same kind of bid under them where there's this encouraging sentiment among investors to buy into these stocks. But we're definitely seeing that sentiment from bigger companies. We've seen tech rally, right? Obviously, they're more connected with that China story, right? Names like Apple or Amazon, but seeing them rally, seeing Shopify rally, seeing these other higher growth names rally definitely signals that investors are shifting back towards the bullish side. They're shifting back towards buying into growth rather than safety. They're shifting back into the belief that things will actually be okay. And that maybe some of the policies of the United States that are not these big trade policies that have gotten everyone so angry might bring more growth in the US than we had expected just a month ago when everybody was selling out of stocks like this and Shopify was hitting, let's see what we bottom tick here, $100 just about. So really interesting there, really interesting story. Now, another story I wanted to talk about that I thought was really interesting, it's all got to do with oil. Now, here on the screen, we see oil leads commodity rally after US-China truce as gold retreats. Another way that I think the market is shifting its focus away from the fear of recession back towards growth. So oil jumping back up. We saw oil fall as Liberation Day started. We saw the sort of slow decline down to $60. Obviously, we talk on the channel quite a bit about this industry because Canada's oil industry is sort of uniquely prepared for the dangerous times. But if we see sort of Brent and WTI sort of regaining its footing, could be huge for that industry. We've seen how the fear of drops in the oil price really hit a lot of American companies. I mean, it did hit Canadian companies as well, but they've recovered in the last week a little bit better. Maybe we'll see the Americans catch back up. Maybe we'll just see the Canadians continue to perform. It was a good day for a lot of the companies we talked about recently. Canadian Natural had a great day. Synovus had a great day. Lots of others as well, obviously, but really interesting story there. This article goes through all sorts of specific details, right? It talks about how Brent was up 3.9%. Again, it mentions the tariff specifically, but the real headline is reducing fears of prolonged economic fallout hurting demand. It says that there's a low likelihood of a full U.S. retreat from its stance. However, that this is sort of, we're back up to where we were, maybe not quite April, but we're back up to that sort of feeling of, hey, things are going to be okay. We're going to grow. The economy is going to grow again. And this is true for other commodities as well. We've talked a lot about Canadian miners as well. It mentions a couple of companies that rose in trading on Monday, sort of like right as the Europeans market opened really early here in North America, but a lot of growth. And of course, we're going to see an opposite trend in gold. If everybody's flooding to growth assets, they're going to not be owning these safety assets like gold. So that's going to maybe hurt some of those high flying Canadian gold stocks. We talked about Agnico Eagle recently. Obviously, Barrick's been in the news, but there's lots of Canadian gold miners out there. Maybe the next little bit isn't going to be so great for them because the trend, the tailwind, the sort of enthusiasm around them isn't going to be there anymore. And it'd be interesting to see what that might do to the sort of commodity itself, and also, of course, to the stock price and to the valuations. Final story I want to talk about today. What's going to happen with Canada? I think because we've seen a very clear trend in these two trade deals made between the US and the UK, the US and China, I think we're going to see a somewhat similar story play out here in Canada. And I'm going to slow down a little bit here because we've been sort of rapid fire covering all of these different elements, but this is what we do here. We talk about investing in Canada. And so when we look at these trade deals, what does the story tell us? Well, I've got a story here from the Calgary Herald. It's talking about the US ambassador. And the quote that every headline has had for the last couple of days is that or maybe not a couple of days, it's for a day and a bit. Tariffs may not be totally removed. So Peter Hoekstra, I'm sorry, I don't know how to say that word properly. He's the I think incoming US ambassador to Canada. He says that he's not sure they're going to be totally removed. He's specifically mentioning the 25% tariff placed on most Canadian goods in March, which were the fentanyl tariffs, right? Obviously, I'm doing air quotes here because as a Canadian, we've seen many times our sort of government show off, hey, look, we are the source of so little of this stuff down to the US. And so maybe that's not the entire reason, but it has been used as a basis for that. So those were sort of the conversations earlier, right? And that there is this sort of conversation still about fentanyl in Canada and how it can be stopped. And obviously that's a bigger conversation than we can deal with here. But if that story is still playing out, if that's being mentioned now in May, right? This conversation that was had in early March, we're still having that conversation in May, right? This article actually brings up evidence of fentanyl production, right? So that story is still going on. Maybe we're not going to see all the tariffs dropped off. And obviously we've seen the new Prime Minister Mark Carney and Trump talk, and maybe they're a little bit nicer to each other, but does that really mean anything? The one real positive note in this article specifically, he says, the ambassador there says, we've moved beyond the 51st state, at least as far as I'm concerned. So that's a big statement. But the story between the US and Canada is going to be tariffs. It looks like that's set in stone. Does that mean that all things are going to stay tariffed at their current rate? No. But I think it's likely we're going to see some sort of tariff on a lot of Canadian goods, which means that this idea or this, animal spirit of, invest in Canada, bullish on Canada, invest in Canadian infrastructure, maybe that's going to stay. And that's a really interesting proposition. It's one of the things we talk about a lot on this channel for things like natural resources here in Canada. The market for them has 4 generations, right? I want to say decades, but it's longer than that, has been the United States. They have been deeply integrated into the American industrial base. And of course, if we're looking at Canadian producers of natural resources losing their competitiveness against American peers, they're going to have to look elsewhere. And that does mean long-term pain for a lot of Canadian companies. You might notice on this channel, we have not talked about investing in lumber. We have not talked about investing into big steel and aluminum plants because I'm just not certain what the story is for those industries. I don't know what's going to happen there. And I can't really understand it until there is some sort of deal made, which I don't think there's going to be. I think we're going to continue to see uncertainty, instability. However, I do also think that the lower tariffs that we've seen put onto the UK and China are likely to also come to Canada. And so we're likely to see, auto parts. We're likely to see that market recover. Auto manufacturing, is that going to happen in Canada? Probably. UK and the US worked out a deal. So could there be a similar deal between us and the US? Probably. I would expect those kinds of stories still to play out. I would expect there still to be a little bit more certainty. And I think we're likely to see some sort of deal made in the not so distant future that helps a lot of businesses in Canada, a lot of people in Canada sort of recover a little bit from the oncoming recession. Now, I don't know that that's going to impact Q2 2025. I think that if you're looking at retailers or even banks or whoever is like really exposed to the Canadian economy, Q2 2025 numbers are unlikely to be your friend. I wouldn't be somebody gambling on earnings calls, hoping that everybody's going to outperform expectations. However, I do think longer term, we're going to see some more positive notes. We're going to see some sort of deal made in the next little bit. We're supposed to see something mentioned about the reduction of federal interprovincial trade barriers before Canada Day. So I think the longer term story in Canada is very bullish. Looking at all this news, I think we've seen a lot of Canadian companies rally. We've seen specific sectors rally more, right? We talked about oil a moment ago, talked about commodities a moment ago. So oil, mining, we're likely to see gold sort of be caught up with. We've seen our tech move a lot, right? We've seen Shopify move a lot. I think as a Canadian investor, this is good news. We should be happy about this. Nobody should have been cheering for the China-US trade war to get bigger and bigger and cause a global recession, no matter how high up your elbows are. Right, that would not benefit us as people, because that would mean, big oncoming recession, job losses, people are struggling to stay in their homes. We don't want that. No matter, even if you're short the market, nobody cheers for a recession, right? It's in the movie, right? Don't dance, don't dance. You should not be cheering for increased hostilities, for increased trade wars, for an oncoming recession. So seeing the off ramp being taken here is a good sign. I think we've seen a clear path towards slow, maybe more stable growth. You should be looking at bigger cap growth, maybe if you're investing in that market. In Canada, we've seen our industry maybe suffer, but we've seen our resources looking stronger. So auto workers and steel industrials and aluminum workers are not going to necessarily love what comes out of this fight. According to what's gone on so far, it looks like, oil companies, mining companies might be pretty okay. And I think also whoever builds in Canada, we're talking, construction companies, we're talking WSP Global, who's a favorite on the channel. We're even talking like financiers like Brookfield. They're likely to see increased leveraging of this conversation. If it plays out the way that it looks like it will, based on these deals, they're likely to see their role as part of building whatever infrastructure benefit them, right? I mean, if we're talking about high-speed rail across Eastern Canada, that would be very unique, right? If we see that Windsor-Quebec corridor or Toronto-Montreal corridor, whichever version of this elongated, sort of, I'll call it Eastern Canada, being an Albertan, but obviously they'll call it Central Canada high-speed rail. That would be huge. If we see like actual trade corridors across the prairies, right? Maybe we're going over to the Port of Churchill, or just like generally connecting the prairies. If we see more infrastructure put into the north, I know Manitoba talked about providing electricity to Nunavut, opening up the opportunity to work on some of those mineral opportunities. I think there's a lot of really interesting stories here, and I think we're likely to see an off-ramp taken in the Canadian-US conversation soon. And that means that as an investor, you can probably take a little bit of a deep breath on some of your investments. Don't expect miracles. Don't expect there to be, everything solved. The market might move hard on whatever deal is made, right? Because the market tries to predict and front run things. But as longer term investors, we should be looking for those opportunities where we can get in, buy consistently, quality companies that are going to grow. And I think the trends really do show that Canadian companies are likely to do pretty well. But if you're like me, somebody who owns the general market, today was a good day for you. It looks like the fear of recession can maybe be pushed back a little bit. even if we're going to see some shorter term recessionary fears, similar to maybe what happened in 2022 when inflation took off, right? Where we had this boogeyman come in and sort of crush consumer confidence and crush investor confidence. Everybody fled to safety. We might see a similar kind of dip and then sort of bottoming out moment. It could be now, it could be, this could be a dead cat bounce, or we could see this have been the bottom where we sat here, that sort of mid-April through May trend, and then we do recover. I'm really interested, but I do think the story is going to be growth, and I am definitely interested in your opinions. So let me know in the comments down below. Do you think we are likely to see the markets turn back towards more growth? Do you agree with me that we're likely to see similar deals where there's some sort of tariff? So, maybe not quite the same exuberance we saw in November, December of last year, but that it's definitely a lot better than the worst case scenarios that were playing out in April, and that we're likely to see things like commodities. We're likely to see like international shipping. We're likely to see e-commerce, sort of higher risk growth, catch back up, or at least start to be an opportunity in the next 12, 18 months. Let me know in the comments. Love to hear your opinions. And if you made it this far in the video, please do like the video, subscribe to the channel. It makes a massive difference. Doesn't cost anything. With all that being said, I hope I see you in the next one.